Thank you, guys. So the first discussion point we're going to look at today is around digital assets. You may agree with me. It seems as if it was only yesterday that the question was, are digital assets here to stay? I think the answer to that is now yes. At Mass Markets, we've had a lot of requests, especially around crypto CFDs. So I'm just curious to know, are digital assets now, or the increase in demand for digital assets, are we seeing that more so than traditional assets? And if so, why is that? And I'll hand that over to you, John, if that's okay.
So, as we discussed in one of our previous events, crypto CFD has gained a lot of momentum, especially over the last 2 years. Is it going to replace traditional finance? Unlikely, at least not at this stage. Are we seeing more and more volume? The answer is absolutely. Month in, month out, every business, whether it's one of our broker dealers clients, whether it's someone trying to get access from a fund management perspective and exposure to this market, the volumes are increasing gradually. Now, there's something unique about crypto, though, crypto CFD, is that it's concentrated on a few major pairs, and all of them trading against the dollar. So we see, for example, we offer about 134 pairs. When I analyze the data, 80% of the business derives from 3 main products. So there's that concentration that is not always healthy, in my opinion. And I've been in the industry for 25 years, and I like to always see some form of diversification. Every broker out there, whether it's in Asia or any geographical area, will be interested in adding that as part of their offering because it caters to a whole new audience and primarily to a young generation that is very interested in crypto. I always make the following analogy. My dad is not very crypto friendly. My brother is, who happens to be much younger than myself. I just close the gap in between. It's just a DNA preference. So if you wish to expand your business, if you wish to be truly competitive, it's something you need to add into your offering.
Thank you, John. And Ryan, if you don't mind me asking, S&P Global, much interest in digital assets or cryptos?
Yeah, it's a tough subject. I think traditional finance and S&P kind of. I think we're looking at it on the rating side. We're looking at stable coins. We have some tax products that work with some crypto exchanges. Chart IQ specifically, our product has worked in crypto space for a long time because we're data agnostic. We don't care what our clients are using in their products as far as data is concerned. So we have a lot of retail crypto exchanges across the globe. I have seen personally that this past year, I think because of the ETF approvals, institutional companies are showing a lot more interest in really Bitcoin and Ethereum mostly, but they're dipping their toes there. So we've seen a lot of institutional interest that has started to kind of come in, and really, decentralized finance in general has become something more on our radar as a company to kind of invest more time and resources into.
Perfect. Thank you very much. And look at it from a different side, maybe. It was a big eye-opener for me over the last 2 years, is the use of digital assets for funding. Very apparent here in the APAC region. Jimmy, I'll ask you, and I hope you don't mind me doing so again. Being local here in Bangkok, is this something you see regularly? And do you think the guys that aren't offering the crypto deposits, USDT, are they missing out?
Harry, let me tell you, regarding, I show you number first, in APEC, okay? In 2022, we have about 8 billion USD funding into the e-platform, okay? And we expect to have 15 billion USD in year 2027. That's like 20% year-on-year growth. So no doubt, e-platform and all the crypto is coming to us. But we have to keep up with it, All the regulator have to learn about it, have to do a best practice and help client to protect them from losing money. Okay.
Okay, thank you very much. Now, sticking with the USDT and the digital funding, maybe I can ask you, Andrew, if you don't mind. Is it more accessible now for clients to do so? Are we finding that PSPs, payment providers, are being a bit more accommodating? That's why we're seeing such an increase in digital deposits.
Yeah, I think it is becoming more easy to access. I think there's still like a bit of a balance between clients using traditional banking systems. We're still part of that network, so there's a little bit of still a degree of caution entering into that space for certain brokers. Yeah, we are seeing demand from our institutional clients because they've got end demand from their clients. So it's flowing up the chain. They are finding it easy to access third-party providers as well. So absolutely.
Okay, thank you very much. Now we look at trading and deposits as a whole. For the rest of 2024 into 2025, what opportunities, challenges do we think digital assets will present? It's an open question. Whoever wants to jump in on that one.
Well, I would say that our business facilitates digital assets services for the last 8 years. We develop our own tech. We distribute that tech to our broker-dealer clients and even our own liquidity providers now are using our solution. With that in mind, the opportunity lies as follows. Any business out there that is not taking digital assets as part of their offering, as a deposit method, is missing out tremendously because we're heading in that direction. Blockchain is here to stay. It's not a question of maybe, will it? It's here, and it will just, if you just take a look, for example, at something very basic, some of the major banks in the world right now are tokenizing some of their assets. Yeah. That tells you the level of development there is in this industry. I remember having discussions with broker dealers back in 2016, and people were suddenly looking at me like, are you out of your mind? What are you proposing? Today, we are flooded with requests that we are trying to facilitate that service quickly enough and deploy solutions to clients on a daily basis. I mean, our business has done fantastic due to this reason. So the opportunity is about understanding what type of deposit method you're going to provide and which service provider you're choosing. Because I'll give you an example. USDT, fantastic. It's a stable coin used by many. Okay, it's not regulated, but still. How many blockchains does your partner support? For example, we do Tron. We facilitate 5 different blockchains. So it doesn't matter which USDT you have, you can accept it. And if a partner like us can offer you the solution, it just increases your chances of that deposit from your client base and ultimately more business for all. On the other hand, there's a lot of profit margins to be made, especially in some emerging markets regions where it is still very flexible. Europe is becoming obviously a little bit more sophisticated. As you can understand, MiCA is right around the corner. But regulation is also a good thing. So if you're dealing with a partner that is regulated, which means they understand the business, that has the technology and the flexibility, you should be in a privileged position to take on. That's the opportunity element that I see.
Okay, thank you. And does anybody else have anything to add there?
Yeah, I was just going to mention, I think it's, after the ETF approval in the past year for Bitcoin, I think the next step in U.S. regulation, at least, is looking at allowing banks to actually be custodians of that stuff. And so regulations have already been proposed. They haven't made it through yet, but it'll be interesting to see when that happens and for other people to then offer services around, Lightning Network and be able to move this currency quickly and efficiently and cost effectively. So I think those are the next steps that are really going to push things forward.
Thank you. Andrew?
I was just going to add, I think the opportunity with traditional and digital assets is just how you present that to your clients. So if you start trying to bolt on every single asset class across traditional and digital, that could affect the user end experience. So just making sure that you're not just kind of adding things for the sake of it, but how is it going to be presented to the clients? As John was saying, you know, the crypto industry, they're kind of tokenizing everything. Traditional finance companies are creating CFDs over everything. So the two worlds are kind of meeting in the middle. Will we be token companies or will we be CFD companies? I think that's going to be the trend as well in the future. So just trying to position yourself, I guess, to be able to offer clients both, but not make it complicated.
Yes, actually, I'm trading the crypto myself, but regarding why this e-platform industry is going fast, because it's easy to use. For us, global forex, you can just register, do KYC, and deposit money, and you can trade anything. We have our own platform called our stock trader, which you can trade 10,000 products around the world. Which means why you go back to the traditional trading, come to the e-platform, it's more easier and easy to manage.
Okay, thank you, guys. And I'm conscious we're limited for time. So last point on cryptos. Now, with the crypto market, we've not really touched on this, but with the crypto market being a 24/7 market, do we think this could create an expectation amongst clients, particularly new traders, who also are looking to trade traditional assets around the clock? And will this create an opportunity for other markets to follow suit with extended trading hours? And I think I'd like to ask Andrew that, if that's okay.
Yeah, definitely. I think one of the clear examples is US equities. So expectation now is clients want to be able to trade those outside of just the traditional market hours. You know, we have an offering where you can trade it kind of 4 hours pre-market. So that's during the Asia time zone. So we're now seeing like 20 to 30% of trading in some instruments in that time zone because of clients in Asia who want to trade when they are watching the platform and the pricing is live in front of them. So that's going to just continue. I don't think there's liquidity there just yet for 24-hour stocks, but it's slowly creeping and it will come. So I'd expect people to prepare their systems for what's going to happen over the next kind of 5 years. I think we'll start to see 24-hour trading in a lot of stocks.
Perfect. Thank you, Andrew. Now, John, our next discussion point is around technology. You briefly touched on it just a moment ago. We're finding that more and more firms are now opting for in-house technology, from CRMs to trading platforms to full turnkey solutions. Do you think this is a must for brokers, particularly in this cyber era, to stay ahead of the competition?
It's a very good question because it has so many ways to put into perspective the complexity behind answering. We are by default a tech company. That's how we originated at B2Broker. However, developing software is not an easy task by any means. People think, and we see this time after time, that you can come into the industry and develop your own CRM. A year later, $1 million down, they tell us, I need your solution. I can't continue this way. So the loss of opportunity on that investment, the time to market, it's unbearable for most businesses. We've seen cases where customers started to develop a certain product and, you know, close to completion, it doesn't work as they expected. It's out of market, it's out of trend. It's very difficult. In-house, it's something you should do over the long term, but you need to outsource. It has to be running in parallel to stay ahead of the competition, to be able to compete truly. You still need a good partner to back you up. Otherwise, it's very difficult.
Yeah, well noted. And Jimmy, you mentioned you have your own platform.
Yes.
Any challenges that you face with the in-house tech?
We have the our stock trader platform and also our mobile platform that we provide for the client. Actually, our office in Cyprus, we have like a 7-story building. It's filled with the almost 100 developers. So to have your own platform is hard because you got to hire a lot of people to do it. For me, I used to work for IBM. We used to outsource for all the Thai bank, Kasikorn Bank, Kung Thai Bank, SCB Bank. They are using the outsourcing. So it's depend on the your strategy, your company strategy, whether you want to put your money, everything in their own platform, or you outsource it. But that also link with the security cyber, and also link with the how you can manage your marketing and customize your platform.
Yeah, thank you. So I guess that's a nice segue into the next question, because what I'd like to know is that maybe, or get your views and opinions on outsourcing. Now we see today there's a vast number of tech providers. So is it fair to say that acquiring already proven technology, there's still huge benefit in that? Maybe Ryan, I can get your thoughts on acquiring third-party tech.
Yeah, sure. Yeah, I mean, I'm definitely biased here, but we've made a business out of 13 years out of building a very niche product, which is charting. And you wouldn't think that you would need to maybe outsource or license a charting technology to put in your product, but our focus is to make it something that's very customizable through data, through functionality, through look and feel. And so these companies can focus on core competencies, and they can license. The phrase is typically build versus buy. That's our competition. Well, that's really turned into buy and build. And so buying, best in breed pieces of technology, and then incorporating that into your own product and focusing on your core competencies, I think has kept us, our business growing over the years. So
Perfect, thank you. And Andrew, if I'm not mistaken, IG mainly all in-house tech, but I remember you mentioning about a recent acquisition that you guys done around futures and options. Would you mind speaking to that, please?
Yeah, sure. So I think it's outsourcing tech. It's choosing your battles. So yeah, we are known for building our own technology. That's how the brand was developed. But we do outsource where necessary. So the acquisition you mentioned, so we ventured into the US market. So we bought a US futures and options broker. So building all that in-house could have taken years to integrate. So I guess, again, what I mentioned before, choosing that battle when it's relevant and it's a proven technology, it does make sense to maybe outsource or acquire rather than trying to do everything in-house. It's hard to keep up these days.
Perfect, thank you. So next discussion point we're going to look at here is artificial intelligence. Now, I think it's quite apparent that AI is relevant in many walks of life. What I'd like to know is, how has AI developed of late within the trading space, and has it helped offer a more bespoke service to firms within that space? And Ryan, I think I'd like to ask you that question. How apparent is it for S&P?
Sure. I think we're focused on, at least from a charting perspective, allowing everyone's developing their own back ends mix of LLMs in order to deliver insight to their clients. And so how do we provide a bridge that allows them to connect their unique back end to that versus us kind of delivering the back end piece? So we've definitely seen a lot of interest, but from a risk management standpoint, it's something we need to be careful with. So
Yeah, understood, noted. And Jimmy, with your platform, is AI at play at all?
Yeah, of course. We have AI or the robot that can tracking what client are doing with us. Normally, like we see, like if we see something like they come and trade and see some hanky panky, we flag them, okay, and then you can withdraw your money, because we know that this industry is tough, and AI also work with the trader. We in the past recent year we can see like a lot of IB and a lot of client using the AI for trading, and that's good because they can minimize their risk. Which is helping us also. When client lost money, we don't like it.
Yeah, noted. Thank you. And I think that's a good point, mentioning risks. I'd like to ask you, John, from a dealing perspective, in relation to risk management, do we feel brokers can leverage AI to protect themselves, or are we still a long way from that?
I think AI is a tool to analyze vast amounts of data to give you a bigger picture fairly quick. You still need a team of humans to properly manage that operation and risk. We use AI to communicate with our partners what is the expectation of our customers. without reaching out to the customer many times, and it just speeds up a process. But there's still a need for humans. I say AI is still at the early stages. It needs to be trained. It needs to be developed. We're still very cautious, to be fair. Yeah, that's my take on it, because we've seen what it can do, but it does sometimes what you don't want it to do. If that makes any sense.
Yeah, very much so. Yeah, I mean, it's refreshing to hear that. At least we're all still in our jobs, I guess. Andrew, do you have anything to add on AI?
Yeah, I think from the risk side as well. So, we're not going full bore into risk management being outsourced to an AI model, but it's that assisting. So I think a lot of people who've worked in sales have spoken to risk teams and said, I want to, create a bespoke solution, but you don't have the manpower to kind of monitor it. That's kind of where the AI can come in. So you train something so it can do the monitoring and then alert the risk team. So that's what I'm kind of excited about, being able to kind of offer clients more bespoke risk solutions. So I think that's what we'll see coming.
Thank you, guys. Now, I'd like to maybe leave the last 5-10 minutes to open some questions from the audience here. But maybe before we sort of wrap up, if I could ask you all maybe to give a quick summary on e-trading within APAC, what you sort of see for the next 6 to 12 months and maybe beyond. Yeah, that'd be great if you wouldn't mind giving us a quick summary, John.
Well, I think if we look at the current state of the market, we got U.S. elections ahead. This is going to bring tons of volatility once again. This has been a record year for us in terms of gold trading activity, coming from all parts of the region, but obviously Asia remains a very strong demographic for us. And I think what is truly important, and this goes to LPs like myself, we have to continue communicate. We have to educate our partners, our clients, of how the margin business truly works, because there seems to be a lack of understanding. There's a lot of over-promising out there. You got to be very careful, because during a time of volatility like this, you need to be a lot more cautious on how you're pricing and margining a client. Surprises is something that nobody likes, and that's what you got to build your business upon. The worst case scenario is how you price ultimately a client, and then both ourselves and the whole chain is satisfied with your flow. So there's a lot of opportunity, but there's a lot of education that still remains a key element into the upcoming months, at least, that are going to be very, very risky from our side. And even don't be surprised if we're going to see some form of hike in margin requirements across the space because of what is expected.
Thank you. Ryan?
Yeah, I mean, APAC is definitely been in the last year the biggest growth area for us, and I continue to see that, and probably in the next year and beyond. And I think for us, it's surprising how many folks are still not embracing mobile or mobile first, and so we're seeing a lot of companies all of a sudden requiring a lot more from their users on mobile functionality in e-trading. So that's an area we've been putting a lot of time and effort into, and making that experience better. So
Thank you. Andrew?
I think probably the biggest opportunity I see in this region is those who get it right between the crossover between traditional and digital assets without ruining the client experience. But in saying that, if everyone's kind of going multi-asset, if you can specialize in one particular thing and make the best of breed in that asset or that particular service, then you'll have an opportunity while everyone's trying to do everything at once.
Yeah, probably more longevity in that as well, I'd say, if you're focused on one particular thing. And Jimmy?
Yes, I think it's really challenging. I'm from the engineering background, so you can see that there's 4M. Okay, first is man. Okay, you need employee. Second thing is methodology. You need regulator. Okay, to tell you what is the best system. And the third thing is about the machine, which is you need a server and software. Okay, and the last one is the methodology. How you gonna do it? Okay, so it's not easy, but we provide the education, called Robo Academy, which we have office in Thailand and also in Philippines. Now soon to be in Vietnam and also in Indonesia. So we hopefully we can provide all the education, all the knowledge to the client before they come and trade in the platform because it's not easy.
Noted. Thank you, guys. We'll all be walking around today, and if anybody has any questions, they can come and find us or look us up on LinkedIn. We're all on LinkedIn. But thank you very much again for joining today. We've still got a bit of time, but do you have anything else to add, Ryan?
No, it's just thank you for having us.
Yeah, thank you, everybody. Thank you very much.
Thank you. Thank you.